Hey guys, Eddie Wilson here, the founder of Think Realty, also the podcast host, and I'm super excited to have our guest on here in just a second. And I want to say a quick thank you to all of you that are just those consistent supporters and listeners and viewers of the show. Thank you so much for your feedback and for all that you do and for always supporting us. But I want to say a quick thank you to our podcast sponsor. The podcast sponsor is Residential Assisted Living Academy. It introduces you to a lucrative opportunity that can yield $10,000 a month. This is on single-family properties where you can actually help senior citizens that need a place to stay. This is Residential Assisted Living Academy, and you can learn more about that at ral101.com. That's ral101.com. Our guest today is Noah Miller. Noah is with Royal Palm Funding. Noah, thanks so much for joining us today.
No, of course, Eddie. Thanks for having me. I'm a longtime fan of the show, so excited to be here.
Yeah, very, very good. Glad you're here. So if you don't mind, just so the listeners and viewers have context, give us, what Royal Palm is all about and what the structure of the business looks like so that they kind of have context for all the questions that I get to ask you here in a minute.
Yeah, sure. So Royal Palm Funding is, we're a direct lender. We are a lender on commercial real estate nationwide. We lend typically anywhere from $100,000 to about $5 million, all existing commercial real estate. So think single family investment homes, shopping centers, apartment buildings, some office. Typically, we're in a first mortgage position. And what we do is we offer investors the opportunity to invest alongside us, earning passive income and monthly distributions. So our business, fortunately, is pretty simple and straightforward, which
Sure.
is the kind of business I like.
Yeah. So you have avenues both for the borrower as well as investors.
That's correct.
That's awesome. For investors, obviously, people like me, it's like you get to a place where I have over 4,000 real estate doors, and you're really just looking for passive opportunities now, right? It's like, I don't know that I really want to amass any more doors. I've probably hit my cap of what I want right now. What does it look like to invest alongside of you? What's that process look like? How does it work? What's a traditional deal structure?
Yeah, so to your point, most of our investors are looking for exactly that. They're looking for passive income backed by real estate. They don't want to be the ones collecting the checks or collecting the mortgage payments or originating the loans. They want to come to us, and we're a one-stop shop and say, I want to invest in real estate. I want to earn a monthly return, but I don't want to do the work. So I'll give you a check, and I'll be invested alongside of you. So that's the service we offer to our investors. In terms of what it looks like to be an investor, one, we have to have a conversation with those individuals to make sure that we have similar interests, our interests are aligned, and because at the end of the day, it's a partnership. We're partners with each other. So I know every single one of my investors. I have relationships with every single one, and that's important to me. Second, from a practicality standpoint, they have to be accredited. We only accept investments from accredited investors. And then after that, it's a pretty simple process of anytime I have a potential deal, I would send it out to an investor and they can decide on a deal by deal basis whether that's a good fit for them. Maybe they tell me that they like to only invest in the state of Florida. And if that's the case, then they only would accept deals and go into deals that we're doing in the state of Florida versus a state in Texas. Because we do it on a deal by deal basis. We're not a fund. I purposely stayed away from a fund structure. My investors like being able to choose specific real estate they're invested in. They don't want to be in a fund that might have locations or properties they don't like. So again, I would basically show you specific deals and you can decide whether that's a good fit for you and if it works in your portfolio or not.
That's awesome. And then do you typically do it like a syndication model where, a dozen or two or 100 investors get into a deal, or is it typically like one deal for one investor?
Yeah, it's a good question. It depends on the deal. Usually there's a few investors in each deal, usually 2 to 5 investors in each deal.
Okay.
We're really not geared for 100 investors in a specific deal. Our investors are typically writing checks, a minimum of $20,000 all the way up to $1 million. So
Right.
for example, if we do a $500,000 deal, maybe we'll have 3 or 4 investors putting up 100,000 each, something like
Sure.
that. That's more common for us.
Yeah, I like that. And I think it's a nice bridge between what we're seeing in the marketplace where because people are struggling so much to find deal flow, especially even active real estate investors struggling to find deal flow, they don't want to go all the way to the point where they don't have control or they can't underwrite the deals and go all the way to this fund model, which is where a lot of people are going. And so you have this intermediary space where it's like, I'm an active investor, but I don't want to just go, I want to look at the deals. And there's still something, there's still something fun and exciting about being able to look at deals and put your money into a specific deal and being invested in that deal. And so I like the model that you have, and I don't see it that often, right? I mean, usually the model is I have this fund and it yields this much money and
Sure.
it's diversified across however many assets that fund can hold. Or it's a big syndication model where it's like we got to buy this 30, 50, $100 million apartment complex, and we're going to let 100 people in the deal, and it's a syndicate, and you still have really no relationship with the deal. So I like the structure a lot, and I think that a lot of our higher level real estate investors that are looking for passive income would like that a lot. So congratulations on that, and obviously if you're a real estate investor out there looking for this, I mean, obviously you need to hit no up and see if these deals make sense for you. Let's talk about the borrowing side. And so you're doing everything from single family to multifamily to commercial and office. Is there kind of a sweet spot that you're looking to lend on? If I'm a real estate investor and I've got a deal or I'm looking at acquiring a deal, how do I know if I really qualify or I'm hitting that bullseye with Royal Palm?
Yeah, from a borrower standpoint, our sweet spot is really, I'll say, $500,000 to $1 million first mortgages on existing real estate.
Sure.
Now, again, I'm diversified in my portfolio in terms of what type of real estate, whether it's single family, multi, office, retail, but we like quality real estate and quality locations. So I will only lend in locations that, for example, have a growing population. If a population is shrinking, I'm not going to enter that market. I don't do any development. I don't do land. It has to be an existing property. It doesn't necessarily have to be stabilized. A lot of people come to us because the property is 50% vacant, and that's why they need a bridge loan. But again, it has to be good underlying asset with a good piece of real estate. And it's funny, with where the banks are right now and the liquidity in the debt markets, it's very difficult for borrowers to get capital right now.
Sure.
We have a lot of borrowers who we lend to who last year would have happily gone to a bank, but banks are just frozen. Either they're not lending or they're saying we'll lend, but it's going to take us 90 days. And a lot of borrowers just don't have the flexibility. And we come in and we offer that flexibility of quick closes. A lot of our closes happen within 2 weeks. Or, we understand special situations like a property that maybe is vacant or undergoing a renovation, stuff like that. So we've been very busy in our business as the banks have slowed down, which again has been advantageous for us. And we've been able to provide liquidity and capital to the market for those borrowers looking.
Yeah. You brought up a great point, and I've been calling it the great capital irony, right? You have more capital sitting on the sidelines than ever before in history, but yet we are at the peak of difficulty to actually get the money, right? And it's like it's this great irony, right? It's like you got $2 trillion sitting on the sideline in private equity dollars, like liquid. And yet it's the hardest thing to do right now is to actually sell a private equity firm a deal right now, right? It's super fascinating, but it's also the great irony. And so to find someone who knows these marketplaces, that understands deals, that moves quickly like you do is really, really advantageous. Let's talk about Florida for a second. Obviously, you're based out of Boca, is that correct?
Yes.
And we're seeing, I have friends, I live in Florida as well, and I have friends that live all over the country and they invest all over the country. And they ask me consistently, like, don't you think that Florida has kind of hit its peak? And it's like when you live in Florida, you realize we're not even close to the peak, and there's still affordable markets in the Florida marketplace. Are you guys highly, highly concentrating on Florida, and what does Florida's future hold? I mean, are you feeling as excited about Florida as I am?
Yeah, I mean, I live in Florida by choice. I think it's one of the best places in the world to live. We do have a large concentration in Florida. Again, I think there are a lot of great markets in Florida that I want to be in. South Florida, North Florida, Central Florida. And again, I only invest money and do deals in markets that are growing and have good economic drivers. So Florida is a good spot for that. But we also have a higher amount, a lot of our portfolio in other, I'd say, growth markets. For example, we have a nice portfolio in Atlanta and the Carolinas and Texas. So again, anywhere really that there's growth potential from a population standpoint, from an economic standpoint, from a tenant standpoint too. Anytime we do a loan, we want to make sure that if that tenant goes out, there are other tenants to fill that space, right? So right now we're in about 12 states at the moment. And again, those have been selected because they're high growth states. So Florida is obviously a big one for us. I believe in it long term, but there are a lot of other good markets around the country that we do like to invest in, that our investors want to be in. We have a lot of investors in the Northeast who tell us they want to be local. They want to be in that New York, New Jersey, Pennsylvania area where we have a portfolio. We also have a lot of investors in Texas who say, I want to be in my backyard. And they want to be in Dallas or San Antonio or Austin. Like I said, there's a lot of good markets that we put capital into.
As we talk to hundreds and thousands of real estate investors nationwide with Think Realty, what's interesting about Florida and Texas is that people in Florida and Texas want to invest in Florida and Texas.
Sure.
And also every other state of the union wants to invest in Florida and Texas. So obviously the opportunity that you provide to invest passively alongside of you in these deals makes a lot of sense, especially when you can find deal flow in Florida. Are you able to find deal flow in some of these hot markets? Are you seeing enough in your pipeline that you could service the investors and the capital that's sitting on the sideline, wondering if they're ever going to get the yield that they once had?
Yeah, it's a good question. Our business is unique. We're in a niche market. There's a lot of lenders out there like myself who are writing $20 million checks on a deal by deal basis. We're not. I specifically focus on sub $5 million loans because there's not a lot of groups doing it. But there's a lot of need for it. So I'm in a nice position because there's a lot of need for, let's say, $1 million loans, but there's not a lot of capital providers. Right. So because of that, we're able to get higher yields. We're able to lend on better quality real estate, and our investors are able to benefit from that. And our investors, to be candid, are earning returns that they would be earning almost in an equity position in some of these larger deals, just because the larger deals have to trade so much cheaper. Our investors are earning 9, 10, 11, 12% returns in a debt position, right? Where their first mortgage secured by a first mortgage piece of real estate. Those are very high returns for debt, which is why, again, a lot of people like our business model and want to invest alongside of us.
Yeah, for sure. And if you are in this space and you're an active investor, you need to take note and go listen to what he just said again, because a lot of you are considering getting into, you've got maybe 20 or 30 single family properties, and maybe you got 50, and you're trying to bridge into these next spaces. And the thing is there's some unreasonable expectations on debt investing, and also what it can yield. And what he just talked about is so vitally important to understand as you move out of your single family investments and into more commercial space. You understand what it means to be an equity investor, what it means to be a debt investor, what those yields traditionally are. And if you have capital sitting on the sidelines, I definitely can say this, that being in a debt position is going to put you in the most advantageous position as an investor to make sure that your capital is returned to you. It's a safer position to be in. So if you're a little bit hesitant and you've got a couple $1 million sitting on the sidelines, it's like what he's offering has a high level of security from because it is backed by, it is a first position, in the actual real estate asset itself. Last question, obviously, you've built a model that's been successful. You're finding lots of deals. You have deal flow. You're diversified in lots of different markets. What's the big expansion for Royal Palm or for Noah, over the next 2 to 3 years? Like, what's on the horizon that you have expectation to see? Where are you headed? What's the growth look like? Is there a certain market you're going to get into? Is there a certain asset class that you're looking for to explode? Like, if you had that crystal ball kind of sitting there, like, what does it look like?
Yeah, it's a good question. I personally believe that the debt markets will continue to be frozen for the next 6 months, year, maybe even 2 years. I just don't see a change. So I think there's a lot of opportunity for us to expand. Again, anytime banks aren't lending, anytime large institutions aren't lending, it allows us to take more of a market share and for our investors to benefit from that. What we've been doing is what we will continue to do, which is conservatively grow the business, conservatively lend and invest. If we don't find deals that make sense, we're not going to do the deals. We're not under any pressure to do deals. We do deals that we think make a lot of sense and that we want to be invested in. And that's exactly what we'll continue to do. Again, I believe there'll be a lot of opportunity over the next 6 to 24 months to do that. And that's what we'll do. And, part of that will be expanding into new markets. again, growth markets that are safe. I'm not going to enter any markets that are losing population or losing economic drivers. But there are a fair amount of markets across the country that we haven't entered yet that are solid markets that we'd like to enter. And of course, included in that is growing the investor base. So more investors have an opportunity to invest in the debt space. I think investors have had the opportunity to invest in the equity space for a long time, but I think a lot of investors are nervous over the equity investments now. And they're saying it's not worth it to invest in equity for a 12 or 13% return when I can invest in debt, be much safer and get a 10 or 11% return. So it's about growing all those, again, conservatively and thoughtfully.
That's awesome. Well, very good. Thanks so much for joining us on the podcast today, Noah. It was great to spend some time with you. How can they find out more information, whether they're looking to borrow or looking to invest, beside you?
Yeah. Check out our website, royalpalmfunding.com. You can email me directly at noah@royalpalmfunding.com, NOAH@royalpalmfunding.com. You can call me anytime, 561-400-7936. Happy to chat, learn a little bit about your goals, tell you about us, and see if we can work together.
Awesome, Noah. Thank you so much for being on the show. Thank you for everything you do for our industry.
Thank you, Eddie. Appreciate it.
All right, have a great day. One more quick thank you to our sponsor. This podcast is brought to you by Residential Assisted Living Academy. Residential Assisted Living Academy introduces you to a lucrative opportunity that can yield up to $10,000 a month net cash flow on single-family assets, as well as they'll give you the cash flow, obviously, for your life, but then you could pass that on as a legacy piece to others. You can see more about that at RAL101.com, RAL101.com. And before we wrap up the show, just a quick plug for our conference coming up in Phoenix, Arizona, March 28th and 29th. Don't miss this opportunity. This is the first time we've taken Think Realty to Phoenix, Arizona, and we expect for there to be hundreds of investors, as well as we'll have 50 or 60 vendors out there that'll help you in your real estate investing journey. It'll be all the support that you need, whether it's a property manager or it's capital sources or whatever it is. We'll have them out there that will help you really expand what it is that you're trying to do in the real estate investment space. And as always, for a thank you, or as a thank you for listening to the podcast, you can go on to thinkrealty.com and use the code podcast, all capital letters, and it will give you a buy one, get one free ticket to any upcoming show. And we'd love to see you out in Phoenix. And again, if you haven't picked up our latest magazine, make sure to go to the local Barnes & Noble and pick one up off the bookshelves, or you can just go to thinkrealty.com and subscribe and have it put right on your doorstep, and we would love for you to do that so that we can support you on this real estate investing journey. Thanks so much for being a part of the podcast. Please give us feedback on all the social channels, and we look forward to connecting with you soon.